The 5-gate protocol is my proprietary trading algorithm. So how I buy and sell is based on what the stock price is doing in relation to the 5 signals that I look for. So this is a trade that I have taken based on what is showing up on the scanner in our platform. And the 5-gate protocol is basically 5 different signals that we look at. The system will actually throw out some opportunities based on the stock symbol clearing all the 5 gates of our protocol, right? The 5 things that we look for would be the 50-day moving average, where the stock is in relation to the 50-day moving average. The second thing that we look at is what is called the TTM squeeze, which is right here, TTM squeeze. The third thing we look at is what is called the RSI. And the fourth thing that we look at is what is called the MACD. And also we look at what is called the ATR. So our signals, how they are generated, what I trade is proprietary in the sense that, the RSI has to be a certain level before I would jump into a trade. The TTM squeeze has to be doing something that makes sense for us before we jump into a trade. And the other thing that we look at very carefully is the ATR, which is the average true range. So every stock has a, movement volatility that we look at. And then the ATR is just the movement on a daily basis. So it has to meet certain thresholds, certain criteria before we would take a trade or surface it to our clients. So the 5 gates is the sort of most basic framework that we use. We have added the actual movement of the SPX. So the stock market per se, if the stock market is going down, then how does the stock that we are looking at perform based on what the market is doing? So for example, if the SPX is going up, then is Microsoft going up alongside the SPX? Then that is another gate that we have actually put in. Then we are also looking at options volume, where is the options volume for a particular stock, and then we build that into the model. Each of these things are given a certain amount of weightage out of 100. So for example, we might say that the SPX, the direction of the SPX or how strong the SPX is given a 5% weightage. So, if the stock is going up and the SPX is going down, then that will go to 0, right? So those are internal numbers that we have based on research come up with, and we are putting all of that into the protocol to surface tradable opportunities.
Why 50-day moving average? Why not 2 weeks moving average? Why not 7-day moving average? What's very specific with 50-day moving average?
Sure. So based on our research, what we have found is that, you can look at the 200-day moving average, you can look at the 7-day moving average, but to get a solid signal that is likely correct or better than a 7-day signal is the 50-day. So if, for example, if you look at my chart here, you're looking at Microsoft. So, one of the things that we also do is alert you when something is sort of not working properly. And in this case, if you look, the white line here is the 50-day moving average. So the white dotted line here is what is called the 50-day moving average. And if you look at the high, Microsoft went up to $555 a share on 8/14 or so last year, right? And then, if you follow the stock, we would be sending out an alert based on our criteria around this time where it breaks the 50-day moving average. The stock price would have been around 517, 518, because one of the criteria that we have is if a stock sort of breaks the 50-day moving average, the likelihood of it continuing to go down is very great. So as you can see, it went from a high of 555 here year, it broke the 50-day moving average around this number, which is 512. And that was around November 12th last year at around 511. And the stock has never gone back over 511. So you see this line, the white dotted line is the 50-day moving average. Once that breaks, and if the other criteria we look at line up, then obviously we are sending you a signal saying, take a look at Microsoft. The price action is deteriorating, and that's sometimes useful for you to decide, hey, what should I do with this stock? Shall I, obviously I'll research it a little bit more. Am I selling the stock and capturing my gains, or am I leaving it? Or, a lot of our clients are really, really smart traders. So if they understand direction and if they feel that, hey, Microsoft is going down, then they are selling calls against their position. If we are surfacing 10 opportunities a day, you don't have to take all 10. You still have to go in, make that judgment call on what you want to buy, what you want to sell, because we are not investment advisors. We cannot tell you what to buy. We cannot tell you what to sell. Our role here is just to surface the opportunity, cut down from 10,000 stocks in the market, and then, surface 10 or 15 a day. That might make sense. Similarly, if you have, large positions, large holdings in your portfolio, and you want to manage them well, this will give you timely information. I have a 7-figure portfolio. Sometimes I'm not in front of my computer, but if I have Meta and I get an alert saying, take a look at Meta, I'll drop everything, maybe for a minute or two, just look at the chart, just look at the news, make sure nothing there would impact me in a way that I wish I could have caught it 6 hours earlier. So that is what we are trying to do. If you are managing between $100,000 and $1 million, at that point, it makes sense to sign up because you're paying maybe 2% or 1.5% of your portfolio value a year to protect your account, in the sense that you will be informed. It doesn't mean that you will protect your account or we will somehow magically save you from losses, but certainly you will not be blindsided, is what I'm hoping. That you will get some alerts, you will look at some information that will allow you to decide what you need to do. I think the biggest problem these days is awareness for most of our clients. They're going to be trading 23 hours a day. So chance of you actually watching anything in real time is zero. Most people have lives outside of watching their screens, and that's where this becomes really important. If you get an alert, if you're able to quickly go and take a look at what's happening with your portfolio, that is very useful, I feel. I can guarantee you that 90% of our clients, doctors and lawyers, are with patients, are with their clients. They're not watching the screen, right? But even when they're sitting with their clients or even when they're sitting with their patients, if something sort of needs their attention, they might see a ping on their phone or they might see an email, and then they could step out maybe for a minute, look at what's happening, and then come back and, take care of business if they need to go into their account to do something or not, but they will be aware. So this is just an awareness engine that we are hoping will provide you a net benefit where, even if you catch 1 or 2 good alerts a year, might save you a substantial amount of money. I mean, I know personally, when COVID hit, for example, I had Amazon, I had Meta, I had Netflix, all these things crashed anywhere from 5% up to 25%, right? And I wasn't even aware because at that time I was talking to clients. That is what we are hoping to avoid. So this is something I built because of my own situation where it makes sense to build, right, for a user.